Hello, option investors. So, what is backtesting and why would you want to do it? You've probably heard this one. History doesn't repeat itself, but it often rhymes. Backtesting is looking backwards over data to find rhymes in history. One kind of backtest is seeing how a strategy like covered calls would perform with the historical results of option contracts. For example, you may have heard someone say that you should always sell in the money covered calls to get more premium, but did they offer any proof? Another person may have told you to never sell in the money covered calls because you're losing out on too much of the underlying stock's gain. Did they offer any proof? I'm guessing no proof was offered by either. So who's right? Hold that thought. Or have you ever wondered just how accurate delta is? It's supposed to give an estimate of the probability an option will finish in the money. But does it? Does it really? We can use backtesting to answer these questions and many other questions as well. You may have also heard this one. Those that don't know history are doomed to repeat it. If you run enough option backtests over various sets of data, you'll gain some understanding of how options would have affected your returns over various times. Bull markets, bear markets, flat markets, etc. However, be careful. Just because a backtest says one particular strategy did great over a time period and set of data doesn't mean it's guaranteed or even likely to do so in the future. Its results should be taken in the right context, and any backtest results need to be taken with many large grains of salt. So now that we know a little about backtests, enough to be dangerous, let's dig in and show a few. So how would you get started backtesting options? Several brokers and platforms offer option backtesting, but I found they just don't have the features and visualizations that I want, or they're confusing and difficult to use and not transparent in what's happening and how they got the results. I want something simple and intuitive yet powerful. I want to backtest options on individual stocks and filter on my favorite attributes like duration, delta, volume over my preferred time period. So I just happen to know of one like this because I'm making it. And I'm going to show it to you. I'm hoping to get some feedback on existing features and visualizations and new ones that you want. Please put your feedback in the comments section, good or bad. The core of this backtester is done and working, but there's an infinite number of other features that could be implemented, and that could be up to you. So the first thing you need to backtest options is a bunch of historical option data. I've acquired millions and millions of these records and transformed them into a format that's fast and efficient for backtesting. So let's look at some of these option transaction records. Here's 10 from Apple from 2022. Now, how could we do a backtest with data like this? To summarize, you need to get the right set of records for the backtest, find the matching expiration record, and then compute the results. So let's run a backtest. Here is the backtest page where you can describe the backtest you want to run. It currently supports all of these criteria, things like stock symbol, expirations, dates, durations, volumes, implied volatility, min-max delta. Some are required with the asterisks and some are optional. So let's fill them in and run one. But first, if you're enjoying this content, please consider liking and subscribing. Let's run a backtest. Let's run it on AMD. Let's run it through all of 2021. So we'll start off January 1st of 2021 and go through December 31st of 2021. Let's make it be about a month, or 25 days to 35 days. Let's give it a minimum volume and open interest of 1,000, just so we've got some liquidity. And let's give it a high delta. So let's make it start in the money. So for 30-day contracts, 0.6 to 0.7 deltas should give us options that start off slightly in the money. Let's run it and see what happens. And a stop. Let's take a look at the results. Here's the chart link. We'll take a look at that in a minute. The first option it found started on January 22nd. The last one started on November 22nd, and the last expiration was December 17th. It found 50 options in this backtest. 18 of those finished out of the money and 32 finished in the money. That's 64% that finished in the money, which lines up pretty well with what their deltas predicted, 64.93%. The worst one lost $3,600, while the best one made a profit of $1,268. The average option in this backtest lost $380 for a total loss of $18,995 on the 50 options it found. These numbers are based on the premium collected minus the amount they finished in the money. This doesn't count any gains or losses made on the underlying stock. In this case, since they all started in the money, recall the high deltas we said earlier, you would have had no gains on the underlyings because they would have all been called away below where they started, but you collected more premium. Finally, we're assuming all the options ran through to expiration. Now, these results don't prove anything other than selling slightly in the money calls on AMD voraciously through all of 2021 didn't work out so well. If you're interested in buying calls rather than selling, just invert these results. We're keeping it simple in this episode and only talking about selling calls. But if you were buying slightly in the money calls on AMD through all of 2021 with a duration of about 30 days, you did great. Now let's look at the chart. Let me zoom out so we can see the whole thing. This blue line is AMD stock over 2021. It started around 90 and finished around 145. The left side here measures the stock price, so it's not surprising call sellers on AMD had a rough go of it in 2021. These green and red lines represent the individual 50 options in the backtest. They're positioned against the right axis to track the overall results. As you can see, over the first part of the year, call sellers were doing all right. And at one point in May, we're up almost $8,000. But then AMD really started to rally in the back half of the year. Its calls mostly took it on the chin during that period, especially over this spike up in October. The overall results were down as much as $26,000 in early November, then made a small comeback to finish the year down around $19,000. I'm going to quickly run one other back test to illustrate out of the money calls. I'll do it on Bank of America during the great financial crisis from the start of 2007 through the end of 2010. Do it for 3 or 4 months, so from 90 days to 120. I'll set the min vol and open interest to 500 each, and the delta to around 15, or 0.1 to 0.2. Let's run it and see the results. So it found 233 options, 232 were out of the money, and only 1 was in the money. Delta was not an accurate predictor. It predicted 15% would be in the money, but less than 1% ended up in the money. The worst one only lost $11, and the best one made $165. The average option made $44 for a total profit of just over $10,000 on the 233 options. Let's take a look at the chart. You see a falling Bank of America stock from around 50 down to around 15 over this time period, and you see lots of green profitable call options. Here's the one losing option, this one red line here. It was caused by this little spike up in Bank of America stock. It's a little bit surprising there were no losing options during this spike up, but it's because we set the duration just long enough for it to fall back down below the strike before the option expired. Again, this doesn't prove anything other than you probably did okay if you were selling call options on Bank of America during the great financial crisis, and you sold them with a duration of 3 to 4 months and a delta of around 0.15. For the techies and programmers out there, I'll spend 30 seconds on the tech stack used for this backtester. I use Python and Pandas to transform and format the historical option data into fast Parquet lookup files, then a Spring Boot microservice that executes the backtest and returns the results. And finally, it's all displayed on a React Web UI, which is what we've been looking at. It's not online or available yet, but will be someday. I still need to decide where and how to host it and make it cloud friendly. I'm considering working with collaborators and or sponsors on this project and open to ideas on how to monetize it. Please reach out if you're interested. And what's the road forward look like? Short term, it's adding a few more features, testing, fixing any bugs, and then making it available online. I have lots of ideas on other things to do, but I'm not quite ready to share them just yet. Please leave feedback, questions, backtest requests, whatever comes into your mind in the comments. It helps with the YouTube algorithm. And if you enjoyed this episode, please like and subscribe. That's it. Thanks for watching until the end and have a profitable backtesting day.